As of 10:44 a.m. Eastern Time, shares of Datavault AI, trading under the ticker DVLT, are currently priced at $2.125. That's a gain of about 4.68% on the session, a move that might look moderately bullish on paper, but which completely fails to capture the sheer chaos surrounding this stock. The expectation in the market might be that this is just another small-cap tech name catching a bid. The reality, however, is that this company is in the middle of an absolute street fight, and it just threw a bizarre new weapon into the mix, a meme coin dividend. That's right. Just today, Datavault AI, along with Silex Holding Company, announced it has set a record date of November 14th for a distribution of Dream Bowl 2026 meme coins to all of its eligible shareholders. This is not a drill. The company is leaning directly into the speculative frenzy that has defined its trading, planning to airdrop these digital collectibles to shareholders who will then be able to set up wallets in the Datavault system. This is one of the most unusual corporate actions we have seen in a long time, and it immediately forces investors to ask a critical question. Is this a brilliant, modern way to reward shareholders and fight back against short sellers, or is it a desperate gimmick from a company under siege? This single piece of news explains the heavy volume we're seeing, with over 26 million shares already trading hands well before lunch. To put that in perspective, that's a significant chunk of its entire float, suggesting that this isn't long-term investing. This is a high-speed battle. Many investors using platforms like Robinhood or SoFi are likely piling in on this news, seeing the words AI and meme coin in the same press release. But what they might not realize is the darkness this company just emerged from, literally over the weekend. The reality side of the DVLT story is incredibly stark. Just last Friday, the stock was hammered, closing down nearly 20% after the well-known activist short-selling firm Wolfpack Research released a scathing report. Wolfpack, which confirmed it holds a short position in DVLT, essentially accused the company and its CEO of being a house of cards, alleging misrepresentation and a host of other serious issues. This is the kind of report that can end a company. The expectation, therefore, was that DVLT might enter a death spiral this week. The stock gapped down hard on Friday, trading in a massive range as panic selling ensued. It looked like the shorts had drawn blood and the story was over. But then Datavault AI punched back hard. Over the weekend, the company issued a formal, aggressive response, labeling the Wolfpack report as malicious, defamatory, and self-serving. The company didn't just deny the claims, it announced it had retained high-powered legal counsel, including firms like Paul Hastings, and was preparing to pursue all legal remedies against Wolfpack for what it termed market abuse. This is not the typical weak corporate denial. This is a declaration of war. So the stock that investors are trading today for $2.12 is not just a piece of an AI company. It's a proxy for a legal and narrative battle. On one side, you have a short seller alleging massive problems. On the other, you have a company alleging illegal market manipulation. And now, layered on top of this war, is the meme coin dividend. This new catalyst completely changes the dynamic. It's a direct appeal to the retail investing crowd, the same crowd that powered the Tesla stock and Nvidia stock surges. It's a move designed to create a squeeze, to force shorts to cover by attracting a loyal, diamond-handed shareholder base. The question for anyone looking at this, whether through a Fidelity brokerage account or the SoFi investing app, is which narrative is real? This level of volatility is why many investors are turning to services like Schwab Intelligent Portfolios for investment help, because navigating a name like DVLT requires constant attention. This isn't a set-it-and-forget-it part of an individual brokerage account. The 52-week range for this stock is 25 cents to $4.10. That tells you everything you need to know. This stock has delivered life-changing gains and catastrophic losses all within the same year. The average trading volume has been astronomical, often exceeding 100 million shares. This is not normal. This is the definition of a battleground stock, where institutional players and high-frequency traders are ripping shares back and forth, liquidating both longs and shorts with extreme prejudice. Let's step back from the intraday noise and look at the company itself. What is the expectation? Datavault AI presents itself as a leader in data tokenization and management built on supercomputing capabilities. All this sounds very advanced. The company claims to hold over 70 patents covering things like AI-driven valuation, data tokenization, and even inaudible audio technologies. It recently announced the creation of an insurance data union and an accounting data union, positioning itself as a central hub for valuable industry data. This is the story that got the stock moving in the first place, pushing it up nearly 80% over the last month, even with the recent crash. The narrative is that this is a next-generation data refining company, a picks and shovels play on the AI boom, which is a story the market loves right now, just as it loves the NVIDIA stock story. The reality is that the financials are, to put it mildly, difficult. In its last reported quarter, the company generated about $1.74 million in revenue. That's a tiny, tiny number for a company that, even after its pullback, has a market cap approaching $600 million. In that same quarter, it posted a net income loss of over $37 million. This massive cash burn is the central vulnerability that short sellers like Wolfpack are targeting. They are betting that the company's futuristic-sounding business model isn't generating nearly enough real-world income to justify its valuation or sustain its operations. They're betting that the company will have to dilute shareholders by raising more capital, which would put pressure on the stock price. This is a classic growth versus value conflict, but magnified by a factor of 1,000 due to the personalities and accusations involved. It's also worth noting that Datavault AI is a relatively new entity in its current form. It was formerly known as WeSet Technologies and changed its name in February 2025 to better reflect its new focus on AI and data. This pivot itself is a point of contention. Bulls see it as a smart strategic move to capitalize on a massive new market. Bears, like Wolfpack, likely view it as a cosmetic change designed to attach the company to a hot trend, a classic dot-com era maneuver. So where does this leave the stock? The future outlook is a binary storm. In one scenario, the meme coin strategy works. It creates a massive wave of retail interest, driving the price up. This, combined with a potential legal victory or even a retraction from the short seller, could send the stock flying. The shorts would be forced to cover at massive losses, and the stock could retest its highs. The company could then use that high stock price to raise capital on good terms, funding its operations and building out its data union platforms. This is the bull case, and it's a powerful narrative. People who messed the Apple stock run decades ago are always looking for the next big thing, and DVLT is certainly positioning itself as one. In the other scenario, the Wolfpack report proves to be substantially true. The meme coin is seen as a short-lived gimmick that fades in a few days. The company's legal threats turn out to be saber-rattling, and the underlying cash burn becomes the only story that matters. In this reality, the stock would likely bleed out, heading back towards its 52-week lows as the speculative fervor dies down and the hard math of the balance sheet takes over. Traders on platforms like interactive brokers, who have access to sophisticated data, are likely watching the cash-on-hand figures very closely. What we are witnessing is the market in its rawest form. It's a referendum on a company's very existence, being voted on in real time with millions of shares. It's a story that involves cutting-edge technology, AI, data tokenization, and then mixes it with the old-school drama of a short seller attack and the new-school speculation of meme coins. It is truly a wild ride. This is not a stock for your retirement account. This is not a stock you buy from Fidelity Wealth Management on a buy and hold thesis. This is a speculative vehicle of the highest order. I am genuinely curious what all of you think about this strategy. Comment below. Do you believe this meme coin dividend is a genius move to fight short sellers, or is it a red flag? In closing, the story of Datavault AI is the perfect example of expectation versus reality. The expectation, fueled by a hot sector and a new name, was that this could be a new player in the valuable world of AI.